What's up, traders? Eric here from MajorLeagueTrading.com, and welcome to a special late night edition of the free nightly video. As you can see, it is late, dark, and we're wearing our dude robe. If you guys don't have a dude robe, then you probably should get one. And if you're watching this here at 11 o'clock at night, then sweet dreams, and you're welcome. So, anyways, with that out of the way, and hopefully not awkward at all, these markets are annoying, and I'm just now finally getting back to the desk here and kind of taking a look at the action from today, and I want to review that and then ultimately what our plan was coming into the day, the trades in which I took from today, and then ultimately a plan here for tomorrow with the Apple, the Amazon, the Meta earnings, and what the market's doing from that news. So let's dive into the charts and take a look at this here. So first things first, I want to go ahead and take a look at the a morning write-up from today here. So this is just in Eric's Brain Dump channel. And the thing in which I was kind of looking at, right, is, and I mentioned it in last night's video as well, FOMCs are kind of notorious for reversing whatever the FOMC news is, right? So if we get a big rally on FOMC, most of the time we'll end up reversing that on Thursday. If we get a big move to the downside, then most likely we're going to end up reversing that to the upside. And that ultimately is, what took place today here. As you can see, we kind of zoom out here. We got a big gap down yesterday. FOMC sent us lower. And then today, coming into Thursday, we managed to rally all of that back. Now, again, I thought we had room to kind of come down here, test some of these lower levels first before we were to get this rally, right? And I've been talking about this, like 763s up here, like this would have made a lot more sense had we been able to test that level, back over in here before we got this, next dip to the downside, and we just were unable to do so, right? So I'm not too surprised that we're going to be coming back up and testing that level. And like I said, FOMC is kind of notorious for doing so. One of the things in which I wrote here is the question I'm asking myself is whether or not we can rally without tagging the lows from yesterday. And if we do decide to go tag those lows, it's probably going to look a little bit more like a short at that point, right? So I talked about this for those of you that watched the Instagram video from last night, where on a first test down into this 482.90 level on the day that got back through that, right? Again, assuming that we opened above it was my language, then longs were potentially, on the table from there, right? So that was kind of the first thing, is like, hey, if we can kind of pop our heads down there, fake out, and then rally from there, it would make sense that we kind of start to reverse that. Now, at the same time, in the back of my mind, I'm also thinking, hey, we're going to possibly get a range day here, and then we'll get the trend with Apple, Amazon, and Meta, right? That would also make some sense. We have three big names getting ready to report. We had a big move yesterday with FOMC. Let's go ahead and get that range day going. So keep that one in mind as well. You'll see where that kind of comes into play for me here on the day, and then ultimately what takes place after that, right? So at the same time, I did put out an idea here that I was open to. I'm going to be extremely patient, but I'm open to a Nasdaq short on a divergence first thing this morning. And then at lows of yesterday, I'm open to a long if we get a solid divergence. Now, that trade ultimately ends up setting up here on the day. But in fact, I was already gone. Spoiler alert, I left the desk before that trade ultimately set up. Now, with that being said, like I said, the only trade in which I'm open to here was a Nasdaq short on the divergence first thing this morning. And so I talked about this one in the chat here as well for the day. So we'll go ahead and move this out of the way, and we'll kind of take a look here. So it's very, very, very minute, the trade in which I ultimately ended up taking today. And it was really, really small. And then I gave most of it back on another trade in Microsoft, which I'll review as well. But I was looking for an early morning divergence. And what you'll notice You can see it now when we're looking at the charts. These were the divergences that set up later in the day, and by that point I had already left the desk. We got really solid signals in both the Dow, the Nasdaq, and the Russell there for those potential longs. Guess what? Russell was at yesterday's lows. Guess what? Dow was at yesterday's low, and Nasdaq was holding the gap fill, and so was the S&Ps. So would have been a really, really nice trade, all things considered, but nonetheless, didn't happen. So with that being said, at 9:45 here this morning, again, this is super, super minute, right? And details matter. Like they matter a lot. You'll notice this high here. We've got a divergence arrow on the chart for the S&Ps here. That level, the high there is 48.93. This next bar pops up and trades 48.94.75, right? So we do get a new high on the day at 9:45 this morning. And then as you'll notice, we come down here to the Dow, and Dow pops in and gets a new high here. So 38.368s, 38.361s. And then as we go over to the Nasdaq here, so Nasdaq 337.75s, and then this high ends up being 335.50s. Now, of course, the Russell's already making new lows on the day. That kind of makes sense here. It's been the weaker market. But Nasdaq, again, 2 points, unable to pop up, get those highs like what the S&P was able to do and like what the Dow was able to do. So, according to my plan, I'm open to a Nasdaq short this morning, right? And then a potential long at the low of day. Again, thinking that most likely it's going to end up being that range-bound type of day, right? So, with that being said, I went ahead and off of this failed, if you will, non-new high, I don't know what you want to call it, not getting the new high, i.e. the divergence, right? I went ahead and was able to take a short position. Now, because we were trading above the opening print, which is 17,306s for me, I need to see a little bit more than just the divergence, right? I still want to be patient with this trade. I still want to be aware of the possibility that, yeah, it might want to rally up and kind of take that high out or whatever the case is. And maybe we reverse, we pull the FOMC reversal move. So I needed to see something else inside of this trade. So what I ultimately ended up doing here was waiting after this, kind of set these little lower highs here. We pulled back. We tested opening print. And this is really important because we already tested once over here. You'll see we pulled back. We traded 306.75s. So a little front run of that level. We came back down. We retested here. We traded 303/4. And then once we bounced up here and we got these highs in place at 323s and we started selling back off through the opening print, right? This is now on the table, right? This is fair game. And I even punched this in the chat earlier as well. Well, I guess technically prior to this actually happening, I punched in the chat that, hey, once we get under opening print, maybe we'll come down and, look to tag those overnight lows or the lows from yesterday there, right? So if we zoom that out, you can kind of see overnight lows are right down in through here, and then the lows from yesterday right down over in here, of course, right? So with that being said, I ultimately was able to take a position here on this bar. Now, something in which I did right here that is a little aggressive in nature, I guess, to some degree, but was the trigger in which I was looking for. And for those of you that are in the mentorship, you'll know kind of what I'm talking about through here as I saw everything unfold. And again, you can go back in the chat and see where I was talking about a break of opening print. We'll take out those lows. I also talked about if that was to be the case and maybe S&Ps or Dow held, because those were actually looking a little bit stronger, then you'll kind of see the things in which I was looking for with that. But ultimately, when we came down, right, we got first test, second test, third test, and then on this 2-minute bar, right, when we popped up and tried to go higher here, once we started turning this bar red, right, again, because we're above opening print, I need to see just a little bit something extra other than the divergence, right? And we didn't get a technical signal on the divergence, right? I can pull this back over, right? There was no actual arrow on these highs for the divergence, right? It's just a pure price divergence from the overall indices, right? So once I saw that, I saw this come back down. We got the third test. As soon as this bar ultimately ended up turning back red, right, meaning we got under this open right here on a 2-minute chart, is when I went ahead and picked up my position. So I just went ahead and market ordered into some shorts right here. I think my fill was 309 quarters. So you can see that open there for this bar ends up being 311.75s. So I let it rally, let it turn back red a little bit on me, right? Meaning the bar turning red on me. And I said, boom, cool. I'm in it. 309 quarters, I think was my fill on this. And then my stops, again, super, super tight, super minute. We're just right over this high here of 17,323. So I wasn't using the highs all the way up here. I was using this small little high right through here. And then my targets here ultimately ended up being a new low of day, which I think this was 94 quarters. Yeah, the low was 94 quarters. So my targets were 94s. And then I actually ended up using 77s as the next target, which ultimately ended up being my full exit on this position, right? Again, I was also thinking that S&Ps, you can read it in the chat, right? I was also thinking that S&Ps are probably going to hold. This is ultimately going to set some sort of divergence, right? Which, as you can see, I do have the indicator over here on this chart. So as we see this low taking place, you can see that we also do get a signal, right? So even if I have targets that are beyond, that divergence, for example, or targets beyond where price is currently trading at, I have to respect the divergence at the same time, right? I'm using the divergence in order to get into this trade, right, with my own entry criteria, something like that afterwards. At the same time, the divergence that allowed me to get into this position in the first place could now be flipping the cards for me and saying, hey, it's time to rally, right? So I have to respect that. And all I did was ultimately end up using 77s as a pure exit for me. And the only thing in which I did is I just kind of looked down here from yesterday's action. It was just an arbitrary area in which to pick the 77s from. And it ends up being just a really, really good exit. And we had that 10 o'clock news announcement that kind of gave us a little shake up right there. And came down, got the fill on that. We had the divergences coming into place. And again, could we have gone lower from there? Sure. In a normal market conditions, would we have gone lower from there? Probably so, right? Market's super strong. We got to be aware of that as well. So shorts in nature, today with that, everything are a little bit more aggressive as well, right? They're a little bit counter trend to the overall rallies in which we've been seeing, right? So there was no special magic or voodoo or anything like that in terms of the exit there. I just ended up picking the 77 number. It ends up working out really, really well because my risk on this trade was about 15 points, right? From 309s up to 323s, right? That's technically 14 points. Call it 15 points in terms of, if I do get a slippage, a tick or two or whatever it is up there, or I let it get a small retest, then, again, it's going to end up being about 15 points on my risk, right? So I'm risking, in this case, Nasdaq here would be $300 per contract. I was able to get some off here at 94s, right? That lined up, right? 309s to 294s as a 1R first exit for me, right? And then that next 77 target just ends up being right around the 2R number that just happens to end up working out in my favor in terms of the exit, right? So with that being said, we are able to pick up about 15 points on the first exit, and whatever that ends up being, about 32 points on the rest of the position there on the Nasdaq. So, boom, pretty locked in, full thing, right? And then we end up giving back some of those profits here. So, anyways, this video is going long, so thank you guys so much if you're still watching. We're just kind of vibing out to these charts at the moment. I didn't realize almost 15 minutes had passed so far. So yeah, with the next trade here, it was in Microsoft. So I can pull this back over. You guys can see. And all it was right here at 10:02. We were getting this breakout on a 2-minute chart. And I talked about this last night too. And this is what I was eyeballing, is we had this target up here at 416.11. Those were the overnight highs from yesterday on the earnings, right, that never got tested. And like I mentioned, like we probably should have tested those from last night's video. Like that would have made more sense to me. So I was like, okay, cool. Second day earnings play. It's got some relative strength to the overall Nasdaq, right? Like again, at 10 o'clock here, Microsoft is pushing highs and Nasdaq is pushing lows, setting a divergence, and we just covered our shorts, right? So you look at this Microsoft chart, and then at the same exact time, you look at the Nasdaq chart, right, from 10 o'clock, like it's got good relative strength, right? That's one of my favorite things in which to do is to find some sort of relative strength, relative weakness name, especially when the market is potentially setting a divergence or what should be and could be somewhere around the low of the day, right? It's really, really good. Like I will take this trade every single time, hands down. Now, so with this, I ended up eyeballing, like I said, that 416 area up above. I wanted some smaller risk on this, right? Just overall everything market conditions this week. I don't have a ton of profits on the week. I don't have a ton of cushion here. And I just really couldn't find the groove in which I, really wanted to. We had the FOMC. So it just I wasn't feeling it, right? So with this, I stepped out. I used the 415 calls. They were a little bit further out here. They were trading about 60 cents, give or take, 62 cents, right? So I went ahead and picked those up. And then under 35 cents on these, I said I'll be out, right? So that's going to be my stop loss on these. So the 415 calls were trading, like I said, about 62 cents there. Under 35 cents, I'll go ahead and be out. So I'm going to risk 30 cents per contract on this. Now, if this breakout fails, if this breakout fails, meaning I'll risk 30 cents if this breakout fails. But those untested overnight highs and its strength to market this morning make it worth the risk, right? So I thought it was going to be worth the relative strength like we just talked about. We had the market where I thought we kind of needed it or close. And then Microsoft was getting this nice breakout to the upside. And we had the room, like I said, all the way up in our 416s. So I went ahead and shot my shot on Microsoft here. And then as you can see, 1036 here, ultimately right down over in here. When we kind of pulled back, we set this low we should have held, right? We came back, retested this breakout area. There was a level just a little bit lower in here that I wasn't going to wait for this thing to pull all the way back to, right? There's no reason in which it should have failed this breakout, especially after the retest. And given what the overall market was doing, right? If we were to fast forward and look, well, here, let's just do it. If we were to fast forward and look over in here when Microsoft got this pullback, right, and starts to pop here, right, the Nasdaq's already back up at highs of the day. Like the relative strength in which we had to the markets within like 15 minutes was gone. Like Microsoft got the pullback here, right, with the market, started to pop. Nasdaq's already at highs of the day. In the back of my mind, again, maybe this is going to be a range day for the Nasdaq. If Nasdaq wants to start pulling back towards low of the day, right, there's no reason for me to stick around past this pivot right here, past this pullback, in order to see if it wants to hold the levels down here at 404s, right? There was just no real reason for me to do that. So I went ahead, I just said, boom, 1036s, I'm out. This is just not the market today. Apple, Amazon, Meta after the bell. I'm going to go ahead and wait for that. So again, I did give back a portion of the profits from earlier on the Nasdaq trade with respect to the Microsoft trade here from today. It was about a 30-cent per contract risk on that. I was comfortable with that. I looked at that and I said, hey, this thing likely at 416s, right? These contracts are probably going to be about $2.50. And that's about $2 per contract, give or take, right? Worth of potential reward. And I'm risking 30 cents. This is like maybe 6.5 Rs, right? That's a good risk to reward here on a second day earnings move that again, probably should have made the move, right? Again, will I take this trade the next time in which it sets up exactly like this? Yes, right? Is it a part of my plan? Yes. Is this a trade, relative strength, relative weakness, in which you can script out in the morning, like what we talk about with a divergence or like what we talk about with the earnings trades and all of those? Is no, because you need it to develop. You need that relative strength or that relative weakness in order to prove itself throughout the day or throughout the morning, whichever one that might be. And then obviously you have a general plan, set of rules, things like that you can take those relative strength, relative weakness plays from. So I think that's a very key point here, right? Obviously this wasn't in my morning plan, but it is in my plan in general, right? So anyways, with that being said here, my plan for tomorrow, it's 22 minutes. My plan here tomorrow, obviously big move out of Meta, right? It was supposed to be like a $23 expected move. It's up like 60 points. So this thing is, almost a 3 times expected move. Absolutely massive. We also have Amazon here up about $11, give or take, right? Pretty decent move. And then the disappointment of the group here is going to be Apple. And this one is going to be a tough long, I think. So it kind of reminds me a little bit of AMD, but the chart's a little bit different. I'm not super interested in potential longs in here tomorrow. But what I am interested in is to see if we can trade down into these lower levels. And if that can happen while the Nasdaq is able to hold this 599 level, then I'm really, really interested in a Nasdaq long, right? Again, Amazon, Meta, those need to be holding opening print. They cannot be fading. Something like what SMCI did from the other day. They actually need to be holding that, potentially looking to put in a trend even higher on the day, which is, again, it might be a feat for Amazon and Meta to do that, considering how big of a gap they're already going to get. But what I really like in here is the fact that over 599s or a hold of 599s tomorrow, we have legit room up into 763s, 730s, right? So there's 130 to 160 points worth of room to the upside. And if we can pick this trade up somewhere in the neighborhood of a 20 to maybe 30 point risk, so call it 25 points on average here, we got about 150 points worth of room to go. That's a 6-hour trade on a Friday in the Nasdaq. So I'm willing to risk some of my profits here from this week, which again are not very big, considering what they could be, I guess. I don't want to say should be, but what they could be for this trade in particular. If this doesn't set up, like I'm done for the week. Like I'm cool with it. I'm going to protect what I got, and we're going to call it. We'll wrap it up, and we'll see you guys next week, right? So, anyways, with that being said, thank you guys so much for tuning in to a special late night edition here of the free nightly video. And again, if you don't have a dude robe, go get yourself a dude robe. They are expensive, they are pricey, but this thing is absolutely perfect for chilling, doing chart work, running to the hot tub when it's cold, after you get out of the cold plunge, putting this thing back on. So yeah, anyways, that's what I got for you guys. Thank you so much, as always, and I'll catch you guys on the next video. Peace.